righty, folks. Good afternoon, everybody. Thank you for coming. I see everyone just kind of trickling on in here. Hey, would somebody give me a quick thumbs up if you could see my share on my screen?
Not yet. Adam, I can tell you that I'm not seeing your shared screen yet.
Okay.
Do your verbal thumbs up.
Come on, teams. There we go.
There
How
it
about
is.
now?
Yep.
Excellent. There we go. That's what I wanted. Perfect. All right. As everybody comes in, if you're new here and you have not signed up for a boss or quote and apply, please visit back9signup.com. You can go ahead and sign in right now so you can follow along. Existing users can also use that site. Click existing user sign in, and you can sign in right from there as well. We'll get started here probably right about 30 seconds to a minute. I'm just letting some folks in here, so bear with me. As you come in here, don't hesitate to put in the chat what state you're from, or if you're feeling great and there's something you want to mention. Hey, knock it out. I hope everyone's been having a great day or week so far. Also, don't hang in here and make sure you pay attention. I'm going to be giving away some gear throughout the program here, so I'll be asking some questions, and those who answer first, we'll get you out some gear today. And for all of those, I know you will be asking, yes, this meeting is being recorded. However, it will only be shared with those who have registered. You got to show up. All righty. Well, let's get this ball rolling so we can be respectful of everybody's time. So again, if this is your first time, welcome. My name is Adam Levine. I am also known as Coach Adam. My job is to help you sell life insurance and to get better at your career, to put new products and services in front of you, and helping you dig up some new opportunities. And we have a very special webinar today. We have North American, and Anthony here is going to teach us about living benefits, also some of their products they offer, and those are some of the best IULs on the market, in my opinion. So make sure to stay tuned throughout. We love questions here, so don't hesitate to drop something in the chat. We'll be happy to get to those as we go here. And again, if you're brand new here and you're just signing in, make sure to visit back9signup.com and go ahead and sign in. And if you're an existing user, you can use that as well. And sign in, follow along here. All right, what I'm going to do here, folks, is I'm going to do a quick little demo because we do have some new users here today who have not seen Boss or Quote and Apply before. So let me go ahead and open this up. This will literally take me 5 minutes. And we'll get right to it here. Okay, 5 minutes. Here we go. So through Back9, you have two main tools. You have Boss, which is your back office support system. Think of it as your CRM, your case management tool, your commissions, your help desk. It's just about everything. And then we have Quote and Apply here. I definitely think most agents really appreciate the Quote and Apply because it is a live website where your clients can go and buy life insurance online without even talking to you. But you can use it in many different ways. It is an extremely versatile tool. I use it on my cell phone, my mobile devices, and even smart TVs, so it works well. To get a quote, really simple. We get a couple inputs, normal stuff for life insurance, and for time, I'm going to speed through this. You land here on your digital insurance market. From here, you see you can select term, you can select permanent. We do IULs, and you'll see that here with North American particularly. as well as some final expense annuities and so on. Let's say we're looking for some 20-year term. This is going to pull in rates from about 15 to 20 companies, depending on your inputs, and then display them in a very beautiful and colorful manner. And whoa, what do you know we got up there? For our living benefits, we have North American. Um, Now, all one need do is click continue, and it'll jump right into the application. I have the option to send John here a link. Hey, John, here's your link. You can go and finish your application online, or you as the agent can take the bull by the horns, hop right in here, either help him with it or actually do most of it for him. But again, don't do a DocuSign or answer medical questions on their behalf. You can share the link right here as well. And whenever you share this link, it's going to end up on the page that you're actually on. So you can literally run somebody a quote. Right, send them this link right here, and it's going to land right on this page. Right, and also handy, here's some policy details like the consumer guide and underwriting guide. Okay, so that's quote and apply in like 3 minutes. Boss manages everything in the background. And so this is your home screen, your quote and applied tracks every single quote, lead, and application that goes through your website. You can create a site or multiple sites. All your cases are going to be professionally managed. We do about 95% of the work for you. I say 95 because there may be some items you need to do here and there along the way, but trust me, you'll know about it. You'll have a case manager and case concierge doing their absolute best to get this thing over the finish line as fast as possible. All your commissions are tracked, forms, applications. You have over 1,100 products and 80 carriers available to you here, multiple quoting options, and on and on and on. I can really spend a good hour or so on Boss if I wanted to. So I hope you all took that in. Like I said, that was lightning speed. If you need a one-on-one demo, please hit my calendar link and go ahead and set yourself up for a demo, and I'll be happy to walk you through it. Okay, so that being said, let me go ahead and take a second here to introduce our guest. Anthony, how you doing this afternoon?
Fantastic, Adam. Thank you for having me.
Oh, it is my pleasure. We are happy to have you. You know, North American's a very well-known name. And I think some folks know the name, but they don't know a ton about the carrier and really where the value is. So appreciate you being here and able to deliver that message to us.
Absolutely. It's a story I love to tell. North American is, I've been with the company for 15 years. And it is a company that, unless you're familiar with us, you don't really know the benefit and the strength that we do offer. So before I get into the content of really why you're all here, let me give you just a really quick North American commercial for those that are not familiar with us. So North American's been around for 138 years, I believe, is what the magic number is now. And you're not going to see the name North American on on golf tournaments. You're not going to see us on blimps. You're not going to see us on bus benches. We really rely on partners like Back Nine to help tell our story. The story is, like I mentioned, 138 years in business. We are A+ rated across the board, but one that is very, very unique is we are an employee-owned company. So we're not publicly traded. And what that means and how that impacts, the advisors and the agents that you're working with is, we don't have to make short-term decisions. We don't have to make, decisions that are made to, boost up short-term earnings, due to pressure from shareholders. Everything that we do, whether it's product design, whether it's underwriting, whether it's contract and commission, whatever it might be, all of the decisions are made with the long-term success of North American in mind, the long-term successes of your advisors that are on the call today, and the long-term success of our products for our clients. So it's a great story to be able to tell that ESOP ownership. I think we're one of just a few, ESOP-owned life insurance companies. So it is a great story to tell, and it's one that I really do enjoy telling. So I don't know if do you want me to just dive right into everything, Adam, or how do you want
Yeah,
me to
no,
handle it?
That was great. Actually, I learned a few things there too. So I hope everyone was listening, because he's right. Not a lot of companies are employee owned. You have a lot of these mega stock corporations
Mhm.
where they're not necessarily making the best decisions in the interest of the clients and the agents. They're liable to their shareholders. So that was really really cool. Thank you. So yeah, why don't this is Living Benefits 101. Why don't we dive into living benefits, kind of talk about that and the differences between them. And then you could lay out some of the differences here between North American products and what's good for what. And let's see if we can't make sense of this all.
Absolutely. Let me share my screen really quick here. And if you guys don't mind, when I present, get very, my hands start to wave. I have my camera on this screen and I have my presentation on this screen. So if you guys don't mind, well, I'm going to take myself off camera as I present, so you're focusing on the content and not my hands waving all over the place. But I'll jump on to answer. I'll bring my camera back up at the end. I'll answer any questions that everybody has. So just bear with me here for a second as I go ahead and get started. Um, let's see here. Okay, we get the audio. We have some audio questions popping up, Adam. I don't know if that's something you got
Yep,
squared away, but
on it.
so go ahead. I'm sorry.
Oh, I was just saying, I'm on it.
Okay, perfect, perfect. Okay, so living benefits. So North American has had living benefits on our life policies, for as long as I can remember. Like I said, I've been here for 15 years, but it's when it comes to living benefits, I think the conversation that you want to have with your clients really revolves around how I like to position it as living benefits on life insurance contracts are providing the safety net of giving you an option of protecting yourself from unknown medical expenses without having to pay the way the North Americans designed them, without having to pay additional premium out of pocket. Um, so we're going to spend the next half hour or so kind of talking about the different options that North American offers. But before we get too far into it, I have to allow our compliance department to interrupt me. Not going to spend a lot of time on these disclosures, other than to tell you that they apply to this presentation in its entirety. I know that Adam said he's recording this, but if you would like a PDF copy of this presentation, I can also make it available to anybody. I can send it to him and he can blast it out to anybody who wants it. So our agenda today is really going to be three main ideas. First, we're going to talk about understanding the risk. I love the idea of if before you can really talk about different features of a life insurance product, you have to understand the risk that the clients face and how these different features, like the living benefits on life insurance contracts, can help mitigate some of the risks that a client may face. We're going to talk about understanding the risk. We're going to explore some solutions because there's a handful of solutions that are available for a client, but there's some downfalls with some of those solutions. And then we're going to talk about designing the solution, and that's where we're going to get into the North American product itself, the products, I should say, that North American offers. Kind of give you an idea of what's different about each of them, and where you could use each one of these products along with the living benefits conversation to really put your clients in a better position. So let's start with understanding the risk. There's three different living benefits that are a part of the North American product lines: critical illness, chronic illness, and terminal illness. And I think when it comes to critical illness and when it comes to living benefits, everybody's mind goes immediately to end of life scenarios. You know, right before, a year or two before someone passes away, 2, 3 years before someone passes away, what medical ailment is going to occur that puts them in some financial stress. But these events that we're talking about here, whether it's 805,000 people have a heart attack every year in the United States. 35.5 million people are estimated to have kidney disease. That's 1 out of every 7 adults. You have 2 million people in 2025 that'll be diagnosed. 2 million new people will be diagnosed with cancer, and 618,000 cancer deaths will occur in the United States. And finally, every 40 seconds, someone has a stroke. And every 3 minutes, 11 seconds, someone dies from a stroke in the United States. And the reason that we bring these up, and I kind of go back to the original thought, is that these, not all of these are end of life, final stage kind of illnesses. These can creep into the picture really at any point in time. I'm 43 years old, and these are some things that I start thinking about, or I've been thinking about now is, you hear all the time, unfortunately, you read a story, you read a news article, you go on Facebook or whatever social media platform you're on, and you see somebody that you knew that's right around your age who's hit with, some sort of critical illness. So we want to try to find ways that we can, help clients prepare for these types of things without putting a lot of their primary assets at risk. So we want to avoid these, the detrimental, or the impact that these types of things can have on a client's financial portfolio. So, but when it comes to critical illness, a lot of critical illness can oftentimes transition into chronic illness. And chronic illness is defined as being unable to perform two of the six activities of daily living, or have a severe cognitive event. And we'll talk about, what those activities of daily living are here in just a few minutes. But more than 944,000 Americans die from heart disease or stroke. And you also have chronic illness disease as the leading cause of death and disability in America. So if you're looking at chronic illness diseases, again, that's defined as being unable to perform two of the activities of daily living or have a severe cognitive impairment. And one thing that North American did a handful of years ago is our original living benefit language had a very important word in the original language that we removed, and that word was permanent. When I first started North American, the definition of chronic illness had to be permanent. A client would not have been able to, realistically recover from that chronic illness need in order to qualify for the ability to accelerate their death benefit. But we removed that permanent wording, it was probably maybe 6 to 8 years ago. So now it can be a temporary inability to perform two of those six ADLs. And those ADLs are that just popped up on the screen here. We have bathing, pretty straightforward. We have dressing. We have continence, the ability to just control your bladder, your bowels. You have eating, toileting, and transferring. Those are kind of the six activities that everybody does on a daily basis that really what's the phrase I'm looking for here, that really identifies whether or not someone is able to just take care of themselves consistently and not need assistance on a day-to-day basis. So you have the inability to perform two of those six daily livings, and if your clients are unable to perform two of those six, what's going to come into the equation is a couple of different types of care that they could be looking to obtain. The first that they might be looking at is custodial care. And custodial care really comes down to I'll use the phrase unfortunate, but the unfortunate burden that falls oftentimes on family members. You think of there's a phrase or a group of people in the insurance industry that we call the sandwich generation. And the sandwich generation are those individuals that have, they're relatively young individuals, maybe in their, upper 30s to high 40s, and they have both kids at home that they're taking care of, but also might have a parent that was diagnosed with a chronic or critical illness that they're also taking care of. So they're kind of sandwiched in between, two sets of people, two groups of people that are very important to them, but they're kind of tasked with taking care of. And when you have that occur, there's going to be some expenses that can come from that. Obviously there's, it might take away from somebody's line of work. If you have a family member that has to quit their job to take care of, a parent or a grandparent or whoever it might be. So that's where the custodial care comes into play. Again, that burden, quote unquote, it's not the best word to use, is oftentimes going to fall on a family member. Aside from custodial care, what you're going to see is skilled care. And a lot of the traditional living benefit or traditional long-term care policies are going to require skilled care, professional care to help take care of the individual. So it's not going to, those long-term care policies might not cover the custodial care that somebody might be more comfortable with, having that care taken at home, by a family member. They may require the person who's taking care of the insured to be a professional in this care industry. So you have custodial care, you have skilled care, but if you're looking at custodial care, you many times, like I mentioned, that care is going to take place at home. And when you have the need for custodial care, there's going to be an economic impact, and could be an economic impact just when it comes to what needs to occur, what changes may need to occur at home to help provide that care. We talked a little bit about, the custodial care, the compensation for a friend or family member to provide that care. Somebody may have to quit their job, and they can't do it for free, unfortunately. There may also have to be remodeling to the home. You may have to remodel a bathroom. You may have to do a variety of different things to protect the patient, and allow them to, to be taken care of and not put them at risk for, major or minor injuries that can occur just on a daily basis. And finally, just again, modifications to the home to accommodate, potential for a wheelchair. If transferring is one of the two of the six activities of daily living that they're not able to accomplish, there may have to be modifications to the home for the purposes of, a wheelchair, making things wheelchair accessible. So if you look at these types of changes that can take place in the home or could be required in the home, again, there's expenses that are going to be involved in that. And where is your client going to get the funds to take care of these potential modifications that have to occur, to provide that custodial care and allow them to stay at home where they're more comfortable? So you have, critical illness, you have chronic illness, the two of the six activities of daily living, and finally, the third event that can occur that North Americans, IULs, will cover with our living benefits, is terminal illness. And terminal illness is very straightforward. Terminal illness is having a life expectancy of 2 years or less. And obviously, we all have a 100% chance of dying, and it's whether or not, we have the flexibility of funds, flexibility of finances to, cover medical expenses that could occur in the final years of life. But oftentimes, the other approach that we can take when it comes to terminal illness is, how can we provide a client the best possible experience for the time left that they have with their loved one? And we're going to talk about that here in just a minute, the benefit of having a terminal illness plan or terminal illness feature on a life insurance policy and what that can mean, for a client to really give them the life that they want to have in the last 24 months that they're here on this earth. So how do we mitigate the risk? We just talked about understanding the risk, but how do we mitigate it? We talked about the likelihood, the percentages, the number of people that are having, heart attack, strokes, kidney failure, kidney disease, critical illness, chronic illness, terminal illness. But we need to mitigate that risk. And like I mentioned at the outset, there's a lot of solutions that we can look at. But I think what we're going to find here at the end of the presentation is that a great solution is a North American IUL and these living benefits that we have. So some of the more common solutions I think that you might all be aware of is traditional long-term care insurance. And for the longest time, this was the primary option for addressing, major health crisis for clients. But as we go through, and as in the financial industry, we're seeing more and more companies are dropping out of the long-term care market just due to the rising healthcare costs. So we have more carriers are dropping out of the market, fewer options are going to be available, and if this trend continues, for younger individuals, younger seniors, younger clients, the options might be even less and less, as they get into that time of life where they need to have the flexibility and the additional assets available to cover, medical expenses that could come up. So what's the other, kind of downside to the traditional long-term care policy? Well, one is it can be expensive. And I always tell people, when it comes to, long-term care policies versus, having features like North American has on our IULs, they are different. So you don't want to directly compare and contrast the two. But with a long-term care policy, you're paying for something that you hope you never have to use. With a life insurance policy, you're paying for something that you know you're gonna need eventually, because from the previous slide, everybody is gonna pass away. So when you pass away, that death benefit's gonna pay out. So if we can take a life insurance policy that you know you're gonna need, and you know that you're gonna take advantage of, and it's gonna pass on to your beneficiaries, if we can add a feature that you can access without any additional premium that can help cover some of those medical expenses, that's a huge benefit and huge advantage for using a life insurance policy as opposed to a long-term care policy. Because again, a long-term care policy, you're paying for something you never have to, you're hoping you never have to use. With a life insurance policy, you're paying for something you're going to use with the added benefit of the critical, chronic, and terminal illness features that we have. So thinking about the traditional long-term care policy and how that compares to what an IUL can provide really kind of swings that, conversation to the strength of an IUL. Another solution that a lot of people consider is government plans, Medicare and Medicaid. We can spend a lot of time going into the specifics. I know we're in the enrollment period right now. I work with a lot of advisors who find themselves very busy during the enrollment period at the end of the year. And we could spend a lot of time talking about the specifics of Medicare and Medicaid, how they work. But ultimately what it comes down to is clients are going to have to qualify. They have to have limited assets, limited income to qualify for these types of benefits. They may not even have these at their disposal. The other solution that we could consider is self-insuring. Okay, now what's the challenge in self-insuring? Now, there's a variety of different things that we could look at. We could look at qualified plans. We could look at, liquidating assets. Again, we could kind of go back to the idea of government plans, Medicaid, Medicare. There's the rainy day fund that could be available to cover these expenses. There could be the grandbaby money, the legacy assets. But what's the downside to the idea of self-insuring? The downside is that every one of these things you see on the screen has a primary purpose already for the client. They have a primary reason for their qualified plan. They have a primary reasons for having the assets they do, the rainy day fund, the grandbaby money. So if they already have a primary reason for these assets, it stands to reason that the idea of really dipping into these for the purposes of medical expenses isn't something that's going to be very appealing to them. So we don't want to have to force their hand and cause them to forfeit assets to cover medical expenses. So the other option when it comes to self-insuring is what's called a hybrid policy. Now, maybe you've heard of a hybrid policy, maybe you haven't heard of a hybrid policy, but essentially what a hybrid policy is it's a life insurance policy with a little bit more of the emphasis put on long-term care, the long-term care element, I should say. So some downside here with the hybrid policy is it's going to be underwritten for morbidity, due to that long-term care feature. You're going to have limited death benefit, but you're also going to have, because you're going to have limited death benefit, because you're going to have more of the emphasis put on the chronic illness benefit, you're going to have a highly leveraged chronic illness benefit. And you're going to have a very limited death benefit that's going to pass on to those beneficiaries. Okay, because this is typically going to be a universal life or a whole life policy, you're also going to have limited cash value growth. And the last downside, if you will, of these hybrid policies is typically these are going to be cost of care reimbursement policies. So the only way that these are going to pay out is if your client is in those skilled care facilities, and they're only going to be a reimbursement of expenses for that care. Okay, so again, you're still kind of putting yourself at risk, or the clients are still kind of putting themselves at risk of forfeiting the assets from their portfolio if they have this hybrid policy and they're looking for a little bit more flexibility. Okay, finally, we're going to dive into how we can use North American for designing a solution that's going to provide a little bit more upside potential, more flexibility but still give them control of their policy in the event that they need it for their living benefit needs, the critical, chronic, and terminal illness. Okay, so
All right,
again, we're going
Anthony,
to talk a little bit about, designing a solution. And when it
before
comes
you
to North
jump,
American, well,
oop,
Adam, is that you?
sorry. Yeah, that was me. Sorry. I was going to say, before you jump into that, let's check in with everybody here and make sure this is going down okay. So if you have a question, put it in the chat. But here we go. We're going to give away our free, really cool back nine polo. Comes in gray, black, and white. So I'm going to ask a question here. And in the question, you need to get the entire answer in one question box. And it's pretty simple here. First one to get it wins, and then you email me your size and shipping address. All right, so Anthony went over the 3 types of living benefits. In fact, if you're cheating, it's on screen right now. What are the 3 types of living benefits? Oh, there you go. I see some answers coming in. There you go. So it looks like Mr. Russell Taylor, Russ, what's going on, brother, was the first one to get it. But don't worry, I'll give a backup prize. So let's see. I see some other people typing it. All right, Denise. Oh, you missed one. You got to get all of them. Yeah, right. I know, huh, Verdict? It's okay. I called it out. All right, Bethany, we'll give it to you second place there. All right, so we got Russ and Bethany. Please email me, Adam at Back9INS, your shirt size, your preferred color, and your shipping address. All right, and then does anybody have any questions on the material covered thus far? All right, sorry for interrupting there, Anthony. You're doing a bang up job. Please continue.
Absolutely, don't apologize. Happy to. I'm glad you jumped in. I like the engagement you have with the question. That's a great touch to these trainings. Okay, so let's dive in, like I mentioned, to the design. How North American handles the living benefits that we offer, and really, then we'll kind of talk about how you can apply them to the policies and different products that we offer. That you can be able to place your clients in depending upon what they're looking for. So use the phrase and use the words a couple times here, and Adam just asked a question on it. So the living benefits that North American offers are critical, chronic, and terminal illness. Now, these are automatically included on all of the products that we offer. There is no additional premium. There is no additional underwriting. The only caveat to what I just said is on our term products, critical illness is not available in the state of California. Chances are it will never be available in the state of California on our term, but on our permanent plans, all 3 living benefits are available in every state that we are allowed to be sold. We're not allowed to be sold in New York State, but we are allowed to be sold in the other 49. So we have critical, chronic, terminal illness on all of our products, with the exception of California does not have critical illness on term. So when it comes to our term policies, and really when it comes to the triggering events for all of our living benefits, it's the same across the board. For critical illness, we have, this is term information right here that you're seeing, but there's 5 triggering events for critical illness. That is heart attack, stroke, major organ failure, or major organ transplant, kidney failure, and cancer. Those are the 5 triggering events for critical or chronic illness, or excuse me, critical illness. Chronic illness, I mentioned it a few times, is the inability to perform 2 of the 6 activities of daily living or have a severe cognitive impairment. And then terminal illness, I mentioned it, is the life expectancy of 2 years or less. And on the screen, here's a lot of information, and I can share this information with Adam. I can share some marketing material with Adam that he can send out. But you see some of the minimums and maximums when it comes to how much they can accelerate for each of these categories. The biggest difference between our living benefits on our term product and living benefits on our permanent product is with our term, there's claims-based underwriting. So what does that mean? What that means is that the severity of the living benefit need will ultimately decide how much of the accelerated amount that the client will actually receive. So think of it this way. If you have a client that has, a 10-year term and they have a living benefit need, critically, let's say they have a minor heart attack, if I can say such a thing. If they have a minor heart attack, but a physician says, you know what, it's this, they're gonna live much longer than 10 years. If they chose to accelerate some of their term, they might not get a lot because the chances of them outliving their term are still pretty high. So the severity, when it comes to term, the severity of the living benefit or the living benefit trigger will determine how much they're going to get. And I'll show you a sample here in just a second. We're going to bring in a hypothetical case design. Okay, so we have a 32-year-old male, preferred not tobacco. So obviously, when it comes to term, we're looking for death benefit protection on a budget. And they want options for the future. Okay, when I say options for the future, what I'm kind of referring to is the option of converting. North America has fantastic conversion capabilities on our term policy. Every living benefit, or excuse me, every IUL product that we're going to cover here in just a second is available for conversion from our term. So we don't have a product created for the purposes of converting. Every IUL that we have in our portfolio is available. So this client wants, again, death benefit protection on a budget. They want options for the future. And the theme of this conversation is they have concerns about future chronic and critical illness needs. Okay, so just a quick overlay of what the premium would look like. So here we have a $750,000 policy, and we see that the premium is going to be annualized at $725 a month. So very affordable. We see 68, or excuse me, right down here, we see quarterly EFT or monthly EFT. We see $63.80. Okay, so it's a 30-year term policy. So on the illustration, what you're going to find is that, it's going to give you this page right here that breaks down the living benefits. But these numbers are maximums that they can accelerate for each of these categories. Okay, so you see the maximum that he could accelerate out of his term policy, if he was diagnosed with a lump sum or 2 years or less, would be $622,000. Okay, chronic illness at the age of 37, which hopefully doesn't occur, he'd be able to accelerate. A chronic illness is an annual acceleration. Okay, so on annually, if it was a very severe living benefit need, he could accelerate up to $166,000. And you see here the different breakdowns of minor impact, moderate impact, and severe impact. And when it's saying impact, it just means impact to the mortality of the client. Okay, critical illness is the same thing, where you have, depending upon the severity of the living benefit need, you're going to have the ability to accelerate more or less, or you're going to get more or less of what you choose to accelerate. So here are just a few other ages, a couple other snapshots of some different durations and how the severity of the need is going to impact the payout. So as they get older and they get towards the end of their term policy, you're going to see a little bit of a reduction in what they're going to receive. But the important thing to remember again here, folks, is that there's no premium added to the policy to have these features on here. And again, there's no additional underwriting to add these features on here. These are automatically included, and they're going to be accessible in the event that the client needs them. Okay. On the permanent side of things, we eliminate the claims-based approach, and it's going to be a discount approach. And the discount approach means that, the later on they are in life, the more that they're going to get of what they choose to accelerate. And a general rule of thumb is that you take the client's age, and that's the amount of what they're. So let me kind of start over here. You take the client's age, and that is the percentage of the accelerated amount that they would receive once they make an acceleration. So I'll give you an example here. Let's say you have an 80-year-old individual. This is for chronic illness. You have an 80-year-old individual, and they want to accelerate $100,000 out of their life policy. The rule of thumb is at the age of 80, they would get about 80% of what they accelerate. So if they accelerate 100 grand, they would get about $80,000 of that in pocket. Okay. And the reason that we have the discount approach is that which we have to make this as cost neutral as we possibly can to North America, because we're paying the death benefit out prior to how, or to when we priced it. And we price it based on, the underwriting is trying to determine, trying to predict, the life expectancy of each individual client that you submit an application for. That's what underwriting does for all life insurance carriers. But if we're accelerating and paying out the death benefit prematurely, we no longer have that money in-house, so we kind of try to discount it to make it cost neutral in North America. Probably a little bit more information than you guys needed, but when you're looking at some of these snapshots of these hypotheticals, you might see, well, if they're accelerating $100,000, why are they getting 80? And that's why, because we take the discount approach to the living benefits on our permanent plan. But again, we see the same triggering events for the critical illness. We see the same 2 of the 6 ADLs for chronic illness, and we have the same life expectancy of 2 years or less when it comes to terminal illness and the benefit that we offer. So if we look at, again, a life insurance contract with the living benefits. So we're still going to have a policy that's going to be underwritten because of that life insurance element of it. It's going to be underwritten for mortality. But we're going to have immediate death benefit leverage. Death benefit on day one, that's going to be that income replacement. It's going to be that backbone for a strong financial plan when you're using primarily a life insurance policy with a living benefit element to it. Okay, you're going to have strong cash value growth potential that can be used for a variety of different things, whether it's a distribution. It can be used for surrender value if the client wants to surrender the policy. You're going to have strong cash value growth in the IUL. You're going to have the chronic, critical, and terminal illness available as an option. Again, no premium paid, no additional underwriting for these benefits. It's going to be an option that they can accelerate in the event that they need it. And here's a huge benefit. Really, they have the option. Every option is on the table for their choice of care. This is an indemnity rider, not reimbursement. What that means is we do not care what the client uses these funds for. Okay, so I'm going to go back to the terminal illness conversation that I briefly started at the beginning of our presentation. With the features that North American offers, our terminal illness being indemnity, not reimbursement. If a client is diagnosed with a life expectancy of 2 years or less, and they wanted to accelerate their terminal illness benefit, they could use those funds to take their entire family on a 2-week vacation and just make lasting memories with each other. They could use those funds to buy a 45-foot motorhome and drive cross country with their spouse. It does not have to be, with the North American living benefit, it does not have to be used for care. It can be used for whatever they want. All we care about is that they qualify for the living benefits, critical, chronic, or terminal. As long as the physician certifies that they meet the criteria for each one of those, when they get the money, they can use it for whatever they want to use it for. There is no requirement for them to use it on actual care. Use it for what they want. It gives them that amazing flexibility of deciding how they want to use those funds once they receive it. So let's take a look at a couple different case designs really quick. And there's a lot of numbers are going to flash up on the screen here, but just know that the purpose of this section is to really talk about the different products that we offer. All 3 of these are going to have all 3 of our living benefits, but they're all designed to be sold in different areas. So our first product that we're going to talk about is the Smart Builder. The Smart Builder IUL is designed for legacy. It's designed to take an asset that a client really hasn't earmarked for the future and leverage it into a larger death benefit to leave a legacy. Okay, so in this example, we have a 65-year-old female. She's preferred non-tobacco. She wants to leave a legacy. She's conservative. She wants an asset to be relatively liquid just in case. Okay, and the money that we're going to target for this conversation is currently sitting in a low interest bearing account. But again, our theme is living benefits, so she has concerns about chronic illness needs in the future. So with this product, what we're going to do is we're going to take a $200,000 single premium, okay, and we're going to add an optional feature called the waiver of surrender charge. So if you look at across the board, from day one, we've created a larger legacy. We've taken that 200 grand and we've created a $297,000 death benefit day one. At the end of year 10, the death benefit is almost $360,000. So again, she was looking to create a legacy. We've created a larger legacy. Okay, she can accelerate up to $50,000 for every critical event that occurs in her life. Okay, so $50,000 is the maximum she can accelerate per critical event. And that critical event, they have to be deemed to be separate instances. Okay, so every critical event that she has that's deemed to be independent from each other, she could accelerate $50,000 of her death benefit. She has liquidity. She wanted to maintain access. The year one cash value, she's put in $200,000. She has $206,000 available at the end of year one, $276,000 available at the end of year 10. Okay, and finally, chronic illness event. At the age of 85, the maximum that she could accelerate out of this policy would be $131,000 plus for up to 4 years of critical illness, or excuse me, for chronic illness acceleration. Okay, so this product, as I mentioned, still has all the living benefits, but it's designed for leveraging a single premium to a larger legacy while maintaining the liquidity of those dollars just in case. Okay, second product that we're going to run through really fast is a product called the Protection Builder. The Protection Builder is a product that's designed to have guaranteed death benefit protection. This death benefit is going to stay in force for as long as the client desires. You can customize this product to be guaranteed to 100, 105, 120, 85, whatever it is. They can customize the guarantee period for this product. They can also customize the payment period. If a client wanted to short pay this product while maintaining the guarantees, they have that type of flexibility to design the premium and the guarantees and the death benefit however they want. Okay, so we'll bring in another hypothetical. Male, 45, preferred non-tobacco, very established in his career. He wants to have a death benefit that's going to stay on the books. He wants to protect his family with a guaranteed death benefit. And he wants extra cushion in his retirement funding. So what does that mean? He wants some cash value. He wants some cash value growth for the purposes of dipping into some money in the event that he needs it. Now, this product is not necessarily designed with distributions in mind, but because it's an IUL, it can still have some great cash value upside. Okay, so we're going to look at $12,500 of annual premium paid to age 65. Okay, his death benefit is going to be guaranteed $1 million to age 113. He still has that critical illness event protection, $50,000 maximum per critical illness event. We're going to have the liquidity. Look at that cash value at age 70 and age 85. You know, surrender value, if he needs to take some money out of this policy, has grown substantially. Okay, but again, now we're going to go into our maximum acceleration at age 90. He could accelerate up to 24% of the death benefit to cover his chronic illness event. And that'd be a per year maximum up to about 4.5 years he could take that maximum out. So the Protection Builder is a guaranteed death benefit contract, again, designed for keeping that death benefit on the books for the desired length of time the client wants to guarantee that policy for, but still maintaining the critical, chronic, and terminal illness benefits. Final product that we're going to discuss here as we're getting to close to the top of the hour is the Builder Plus 4. And the Builder Plus 4 is an accumulation focused contract. Okay, this contract is designed for cash value growth. It's typically designed for cash value growth and typically designed for accessing distributions, tax-free distributions to supplement retirement income. So again, let's take a look at a case study. You got a 40-year-old male. He needs death benefit protection for a growing family, but he wants to max this out, and he's looking to max out his accumulation potential for the purposes of retirement. Okay, so $15,000 annual premium going into this. His initial death benefit starts off at $252,000 and some change, but it grows to $825,000 at the age of 65. On a permanent product, again, same critical illness maximum, $50,000 per election, per critical event. Look at the liquidity side of this. He'd be able to take out at the age of 66 $87,000 of tax-free money every year until he's 100 years old. $87,000 used to supplement his retirement income. And he would still have the living benefit needs and living benefits he'd be able to accelerate for chronic illness up to 24% annually to that maximum of about 4.5 years. Okay. And I really do like this slide right here. This is just a snapshot of the different product offerings that we have and really what they're used for. The Smart Builder, again, is used for liquidity. The primary concern is liquidity with that product. Protection Builder, the primary concern is legacy. The Builder Plus, the primary concern is longevity and distributions. But if you look at that far right column, do each one of these products offer chronic, terminal, and critical illness? They absolutely do. Again, no additional premium, no additional underwriting. So as we come back to our agenda here, we looked at understanding the risk. We talked about the risk that each client faces in both the critical, chronic, and terminal arena, the different, the medical concerns, the statistics that we're all facing when it comes to living benefit needs. We looked at some solutions, whether it's self-insuring, whether it's those hybrid policies that have some downside because of how they're designed. We looked at the government programs that have some limitations, and you're limited based on assets and income. And then finally, we looked at the North American option. Using an IUL, using a life insurance contract, whether it's term or IUL, that has those living benefits baked in. And we talked about some of those design scenarios using all three of the IULs that we offer. And we talked about how each of those IULs is sold to be a little bit different. So really the question comes down to, what next? How do you use this information to your benefit? It really comes down to who do you know? How do you have, who do you know that really is looking for a life insurance policy, and you could position a life insurance policy with the added benefit of the critical, chronic, terminal accelerations that we offer here at North American. And if you're thinking about how do I start that conversation, we want to leave you with some good information. This is a great method, the OTCA method. It just kind of breaks down to how you can start these conversations. With an opener, establish your connection with the client. What you're thinking. Tell your client that you've been thinking about them, and you have some concerns about their current financial situation, and you want to get together with them and talk about the client options and see if we can't help them with a call to action. So it's a great method of really just getting in front of these individuals and having these conversations. Adam, I'm going to turn it back over to you to see if we had any questions that came in. It was a lot of information, but I appreciate the opportunity to tell that North American story and to really talk about the living benefits that we have.
Yeah, that was excellent, Anthony. Thank you so much. I mean, I definitely picked up a few new things, and I'm an old dog in this industry, so you can teach me some new tricks. But yeah, Russ asked a great question. Okay, on the Smart Builder, I'm assuming you mean, we showed an example using an initial funding of $200,000. Is there a minimum someone can start with?
Great question. Great question. The only thing that I would say about a minimum is that $200,000. Yeah, a lot of people don't have. Well, I should say some people might not have a $200,000 asset that they're looking to contribute to a life insurance policy, the single premium. The minimum that I would have you keep in mind is that policy has a minimum death benefit of $100,000. So yeah, I've designed cases on the Smart Builder where we have a $50,000 contribution. It doesn't have to be six figures. It can be as low as 50,000. But you would have to maintain that minimum death benefit of $100,000 to start, which is the minimum for that policy. But no, there's really no minimum. It would just all depend upon the older the client is, maybe if they're a little bit more heavily rated. Smaller dollar amount contribution isn't going to perform nearly as strong as the larger ones will. But no, there's no minimum to how much they could contribute.
And another thing to keep your eyes out for, guys, is don't forget about the magic of a 1035 exchange.
100%.
Yet another reason to be in the business of policy reviews. I can't tell you how many times I've suggested this, and the agent said, "Oh, well, what do you know? This guy has an old whole life policy from State Farm from 40 years ago, but he's got 30, 40, 50,000 in cash in it." Well, man, that thing is really going to supercharge that new policy. And, maybe it does require some extra premiums, but it's very minimal,
Yeah.
so we're just kind of tossing that cash value on over into the new one. And it really has a big effect.
Yeah, and Adam, you make a great point, and another way that you could really open a conversation, when you're doing these policy reviews and spark the conversation about living benefits is simply by asking your clients who have life insurance, do you have old insurance or do you have new insurance? And they're going to look at you without knowing what that means. They're going to have to ask you what that means. And now you're going to be able to say, well, the old life insurance contracts typically did not come with these extra benefits for chronic, critical, and terminal illness. New policies, they give you the safety net of being able to take some of your death benefit to cover medical expenses if you're ever diagnosed with chronic, critical, or terminal. And then they all of a sudden they're pulling their policy out, they're looking, they see they don't have these living benefits, and now that 1035 conversation becomes even more important. We could take these funds, we can put them into a new policy and minimize your premium contribution, but give you some additional benefits that your old policy didn't have. So you make a great point about the old contracts really kind of going after those with the 1035 conversation.
Yeah, excellent. And remember, guys, that 1035 means there's no tax impact either.
Mhm.
From like kind to another product. So excellent point. I'm also about to drop another resource into the chat here that I use a lot. It's called Care Scout Cost of Care. I mean, you want to have somebody's eyes open. You click this link here, and what it'll do is show you the cost of care over time. Because somebody say 40 years old right now, $9,000 a month isn't going to buy the same care 40 years from now. And so this has been a really great planning tool that I've used with some other advisors as well. So check that out. It's also available in Boss.
And then I'm gonna
Uh,
do something really quick here. I'm gonna stop sharing my screen for just a moment to put my presentation, or excuse me, put my um, email and phone number on this last slide. So bear with me for a second here.
sure. Well, while we're waiting on that, any other questions? That was great, Russ, by the way. Anyone else have any good questions? And then we're going to ask one last question in a second here for some more polos. If you've won before, please give other folks here a chance to get one. There you go. If you want to take a quick screenshot on that, of course, I'll be sharing it too once we get these slides out to you along with the recording. Anthony, you've been phenomenal. Thank you, man. I appreciate it.
Oh, happy to help. Thank you for having me.
You got it. All right, guys, here we go. Here's the last one. Again, I need a full answer here. So this goes way back to what we first started talking about, more so when it comes to chronic illness. And the triggers are the activities of daily living. So who can name me at least three of the activities of daily living? Let's go. All right, winner gets a polo. Yep. So Denise, I got you there. These are great answers. And Brian, you know what? I'll give it to you too. So you both will get a t-shirt. Please email me your size, preferred color, and shipping address. And we will get those out to you as soon as humanly possible here. And just a quick note, I really appreciate everybody jumping in here, and thank you for coming. If you like this event, you like this format, you learned something, please share with your colleagues, your staff. Would definitely love to increase the size and see more folks here. It helps me bring in guys like Anthony here, and just it's a better environment really for everybody. So thank you once again. So unless anybody else has any questions, I'll pause for a couple seconds here. Yep. Okay. Well, again, I'll give everybody back the rest of their day here. Anthony, appreciate you and North American and your support here. And well, thanks again, everyone. Look for an email. You'll get a copy of this recording in the slides shortly. And look forward to the next one.